Hi, my name is Connor McMahon. I'm the retail advisor here at SterlingCRE Advisors. And I'm going to talk a little bit today about the general retail market and some trends that we're seeing. Over the last 24 months or so, the retail market has been quite resilient. And we're seeing that trend continue and stretch into 2026. Some of the things that have really been supporting this resiliency, first off, the most important thing to talk about is consumer spending. Our consumer spending has been keeping pace with inflation. The strong consumer spending supports retail sales. That supports our businesses, and that also supports the investment capital that's been moving into retail real estate. We track a lot of other really important metrics in retail. We pay attention to interest rates in the bond market and inflation, but really consumer spending is the key important piece that's really been keeping the retail market healthy. In Montana and really in the Mountain West in general, we've continued to see very minimal construction. This has kept the supply for new retail really constrained. What this means is that the demand for retail space is at all-time highs right now, with retailers showing strong sales and the desire and the need to grow and expand. We currently don't have enough in the construction pipeline to come close to accommodating all of the growth. So we expect retail throughout the rest of 2026 and well into 2027 to continue to be a very low vacancy asset type. This has really continued to support the investment dollars that are poured into real estate. Investors are really confident that the real estate they're holding will increase in value over the next several years. First, because the businesses that are in that real estate are doing very well, and also because there's just no new construction happening. So, from a infrastructure location perspective, it's adding immense value there as well. Now, there have been some headwinds in retail commercial real estate. The wage and job market in certain sectors has been really challenging. For a lot of the retail, it's the entry level, lower wage. We've seen wage growth compress in that category a little bit more. The labor market's been a little bit more difficult, but retailers have been getting through it and have been figuring it out. Inflation has kind of continued to be persistent, and interest rates remain a little bit higher than where everyone was hoping they would be from 12 months ago or 18 months ago. Despite a few of these headwinds, the fundamentals remain really strong. The stores are putting up good sales, and there continues to be high demand for good quality retail locations. For these reasons, I'm really optimistic about retail throughout the rest of 2026 and moving into 2027. If you have a retail property and you're interested in knowing a little bit about what your property might be worth, whether it be for lease rates or sale rates, please give me a call and I would be happy to visit with you about that. Again, my name is Connor McMahon. I'm the retail advisor here at SterlingCRE Advisors.